Gifts to charity are also deductible. And to be deductible, they have to be to a qualified charitable organization. In general, 501c3 public charity or public foundation. So it has to be a qualified organization, and it has to be a free and clear gift. So it is something you give with no expectation of anything in return, other than of intangible spiritual value. So that means you can donate it to your church, and if you receive a blessing in return, that has no cash value, so you can still deduct your full gift.
What about those people who make like astronomical deduction and get their name put on a building?
Like Harvard Library, that kind of.
Yeah. If you leave like a huge gift to a university, if you, I guess it would be, having your name on that does not really have any cash value. So I suppose it's still completely deductible. If you did it without the expectation of having a building named after you, that wasn't part of the negotiation, then it would be deductible. I suppose if you negotiated, like, I'll give you $5 million if you name your library after me, that might fall into a gray area. Like, what is the actual value to you? What's the cash value of having a library named after you? I don't know. If you do receive something in return, your gift is reduced by the value of what you received in return. So if you donate $1,000 to NPR and you get a tote bag in return, and the tote bag is worth $20, then you deduct $980. If you buy Girl Scout cookies, that's not a deduction. Whatever you pay is the fair market value, unless you don't accept delivery of the Girl Scout cookies. Some troops will say, do you want to buy Girl Scout cookies for the troop? So if you buy 10 boxes of Girl Scout cookies and say, go ahead and keep them, you can have them, that is a deduction. Similarly, if you donate to the Alaska Peace Officers Association, you buy policeman's ball tickets, and you don't attend, that's a donation.
No, policemen have balls.
They have the biggest balls. If you buy raffle tickets, no matter how good a cause it's for, that's gambling. That's not that's not a charitable contribution.
But when I use what I spend as a deduction for gambling, you have to do something to get to the stuff from your gambling.
Right, yeah. Gambling losses is a separate deduction, but it's not a charitable deduction. So one thing you could do to get around that, if you want to get a deduction, is if someone wants to sell you raffle tickets for their charity, you can say, well, instead of giving me raffle tickets, I'll just give you $100. That would be a deduction. Yeah. And in Alaska, gambling is only legal if it's for the benefit of a charity. The local bingo, if you go to local bingo, your money's the 50% of your money is going to charity, but you don't get a charitable deduction for that. You can also deduct. You can deduct money you give to a qualified organization. That's pretty normal. You can also deduct the value of goods that you donate. So if you donate used clothing to Goodwill, that's a deductible donation. Because even though Goodwill itself is not a charity, they're collecting on behalf of Big Brothers Big Sisters, so that's the actual beneficiary. And that's deductible. One thing to note about donating goods is that the charity is not going to, because they're actually not allowed to appraise the value for items that they're receiving. It's the taxpayer's burden to decide what the value is of whatever they're donating, and to be able to back it up in case of an audit.
So, I
if I donated my Beetle fly out
Mhm.
and said it was worth $100,000 for 50,000,
Mhm.
would that work?
Any,
You have to be able to prove it if they come back.
you have to have proof for it, but, yeah, we'll talk about substantiation requirements in just a second. Any claimed value over $5,000 has to have a qualified appraisal. And it has to be a third party. So it can't be anyone involved with the charity, and it can't be anyone related to you that does the appraisal. With the exception of stocks and bonds, anything that you can look up the price on Google Finance. You can deduct if you're providing services as a volunteer for a charity, you cannot deduct the value of your services, but you can deduct your out-of-pocket expenses, including transportation expenses. Yeah, Nick.
Okay, so I volunteered for the election.
Mhm.
And it didn't November. They donated money to us for working the election, and so it was untaxed. So did I report that on my taxes?
I'm pretty sure you do, because you're receiving money in exchange for a service you're providing. And so that's one of the basic definitions of income. So substantiation requirements, this is one of the first times we come to something called strict substantiation, which means you have to be able to prove your deductions. There's something from the antiquity of tax law called the Cohen rule, which for many things says that this was a tax court. Like the IRS said, you owe this much in taxes, and the taxpayer sued the IRS and went to court and said, I don't owe this much in taxes, but he had no records. And the tax court says he didn't keep any records or very good records, but he obviously had expenses for his entertainment business. Best he could do is come up with a reasonable estimate. The tax court said, hey, IRS, you can't say that in any reasonable sense that he must have had some expenses, but we're going to declare those expenses to be zero. So for many things, if you can come up with a reasonable estimate with some logic behind it, and you don't actually have all of your receipts, you can take deductions. But for things like charitable contributions, there's specifically an anti-Cohen rule, which says you don't get a deduction unless you can prove every single penny that you're deducting. And so for charitable contributions, your strict substantiation requirements are: if your gift is less than $250 cash, you have to prove it by some sort of bank record or a receipt from the charity.
So basically, you prove that you pulled that.
Right. And that's per gift. So if it's $50 every week to your church, it falls in under $250 threshold. For any gift of $250 or more, you have to have an acknowledgement from the charity. You have to have a thank you letter. So that's the rule for cash contributions. Under $250, you have to prove it with a canceled check, a bank record, a line item on your credit card statement. For $250 or more, you have to have a thank you notice. For non-cash deductions, you must have a receipt from the charity describing what it was that you gave to the charity, and how you have to describe how you determine the value of that. If your total donations of non-cash items is under $500, then you just have to have those receipts. If the total value of all your non-cash donations is over $500, then you have to attach a form called 8283 listing all of your donations, the value of each, how you acquired them, and how you determine their value. And then if any specific item has a claimed value of over $5,000, you have to attach a qualified appraisal to your tax return. We had a client who donated his grandfather's ring to a Holocaust memorial and didn't get an appraisal for it. So we were able to deduct $5,000. It's definitely worth more. And then there's a special rule for motor vehicles. If you donate a motor vehicle to a charity, your deduction is going to depend on how the charity uses that motor vehicle. If the charity just auctions it off to raise cash, then whatever cash they brought in is your deduction.
What about like my house, where they actually take those vehicles and give them to the teens that are of age that need it for work?
Yeah, that's the if the charity gives it to a needy individual or uses it for their charitable purpose, like if you donate a van to a charity who maybe they're in the business of collecting recycling as a public benefit. So you donate a van to them, they use that for their charitable purpose. Or if they donate it onto a needy individual, that is, your deduction is going to be whatever the blue book fair market value of the vehicle is. And again, if it's over $5,000, it has to be appraised.
Has to be appraised, but you can't just go off like Kelly Blue Book.
I think you can. Because a vehicle donated, the charity is supposed to fill out a Form 1098C and explain what they did with the vehicle. A lot of local charities, especially the smaller ones, don't know about this. So if you're doing some of taxes, they say, I donated a car to this charity, then you're going to have 1098Cs under the counter here and say, get them to fill this out.